What's the problem with this chart? It looks like some squiggly lines. For everyone in cryptocurrency is not really paying attention to this. The 10-year yield is currently basing out at this range at the 4.2% region. 5-year yield doing exactly the same thing. 2-year yield doing exactly the same thing. And of course, its other candidate, the 30-year, is also holding out at this range. What does it tell you and why is it important? It's because this is the yield. This is the rate of return that investors are happy to receive when they buy US debt. Well, they're not buying US debt. And you can see bright as day that this move right here was just done on a whim. It was a wild move to the upside in the bonds. There was an instant demand for the bonds market. And that equally is then going to start making investors come back to terms with things. And of course, the bond market is looking like it's going to come back down again. Why? Well, let's just go over to what happened today. Stocks fall as weak treasury sale lifts US yields. When you read titles like this, you can automatically assume where the market is at. If there is a weak treasury sale, it means investors are seeking a higher rate of return to buy US debt. Now, of course, in relation to this morning's video talking about the Treasury General Account, it means that that bad boy is starting to go up, which implies that there's going to be a little bit of a liquidity scrunch when it comes to liquidity hitting the marketplace. Equally, if that happens, it means the yields go up. Why? Because there's been more debt that has been issued by the US government. Now, I was tagged earlier on by Jimmy the Patriot in regards to Zero Hedge's comment about the reverse repo hitting 80 billion. He says that almost completely drained. Better hope that stablecoin demand comes in for the trillions in rolling bills or else. Well, what does he mean? Well, let's just go over and have a look at the repo right now. Here we go. So in front of you is the reverse repo purchase agreements. Now, the best way for me to explain this to you is when this goes up, it's going to hurt Bitcoin. When it comes down, it helps Bitcoin. But let's just hold on a minute. In front of you is the US Treasury yield spread. This is really important at helping you understand when in the marketplace does the market actually start to correct, because there is potentially maybe a lack of commitment or there is not enough liquidity coming into the marketplace. How do we identify that? In front of you, you have got the 10-year, 2-year yield spread. Blue line, 30-year, 10-year yield spread. Red line, 10-year, 3-month yield spread is the yellow. And then you've got the green line, which is the S&P 500. Whenever there is a spread between the 10-year and the 30-year, so the 10-year, 2-year, and 30-year, 10-year, this usually tells you that there's no consistency amongst investors. It also means certain investors are on the bench about whether or not they should be going into shorter-term dated securities or longer-term dated securities. So it's clear as day that you can see here on the 10-year, 2-year, when there is a spike up right there and there is a spread in between the two of the 10-year, 2-year and the 30-year, 10-year, you can see that the stock market, which is the S&P, starts to correct. Why? Because it's showing you that investors are wanting to receive a higher rate of return on holding shorter term securities, as in the US debt. So to put it quite simply, we go over to the 10-year or the 2-year yield market. When the 2-year yield trades higher than the 10-year yield, that's a problem. That means there is a spread. That also means yield inversion, which also implies that whenever the 2-year is trading above the 10-year yield, it means investors are preferring to only take on risk for shorter periods of time and earning more money from it, as opposed to going into a longer term period of time, which is the 10-year, and earning less. Doesn't make sense, does it? How can you go and give the US government millions of dollars on a 2-year bond and receive, for example, 4.2% on the 2-year and you're only getting 4.1 on the 10-year? Logic says that when you're holding something for a longer period of time, you're going to earn more money. When you've got yield inversion, which we don't have, then that can usually be signs of a recession. Looking at this chart right now, you can see that there is sort of a little bit of a spread amongst the yields, but it's nothing to be too concerned about. It's when we start seeing big spikes like this one right here, which do give us the idea that potentially there could be a little bit of a problem with liquidity in the future. Let's just understand where we are with the stock market first. Nasdaq today decides to make a nice little stop run to the upside, pull straight back. Now, because the market isn't closed just yet, the volume is still trading below average, and it's lower than the previous day's activities anyway. But price action has actually closed, or is looking like it's going to close below the previous day's close, which from a technical point of view, that's not showing strength, but the volume's not there to back the idea of the market pulling back aggressively, which in my opinion is another dip buying opportunity. Now, let's just put things into perspective. Diving into cryptocurrency, let's look at where we are. BlackRock sold about 900 Bitcoin ETFs to only come back into play and buy another 363. So we're going to cancel that sell-off and make it 600 Bitcoin ETFs have been sold, not 900. Looking at the inflows altogether, you can still see that, well, we're still at the balance of 738,170. Nothing is really happening in the ETF for me to be too concerned about. But when we actually look at price action for cryptocurrency overall, you can see that Bitcoin is holding out at these highs, and this was a wonderful move. And again, look, they did exactly the same thing again, as I said in the video earlier on this morning. Green vector candle block principle. They came into that logic and they made the move to the upside. This was the trade that I took earlier on, which I shared to the Platinum members right here. So I sent them the video this morning and I gave them my entries that I took on Ethereum and on Bitcoin. So Bitcoin did make a little bit of a move up, but then it retraced back down again to only make the reversal back up. So those guys got that update, and this was the actual price action itself from the chart. So we have this logic here, which is the block principle. Wanted to see Bitcoin come up a bit, come down, test the entry point, and then go towards the first target, which was 115,727, and then the next target, which was the vector candle block principle over there, which was at 116,751. And you can see Bitcoin today went to 116,829 before it pulled back. And then we, of course, took that trade today, and we had the entry right here, the average entry. As you can see, we took the entry. It did the retrace, which is what we wanted to see them do. And then they made the breakout to the upside. And that's where I got my sell order and triggered that and just going into it. So I copied the trade over with Ethereum as well. So we took the Ethereum trade, managed to make from 3,710 to 3,810. We cleared $6,714 on Ethereum. And then on Bitcoin, we made $3,825 from an entry of 114,875 to 116,261. So that was the example of the plays that we gave today, and there is Ethereum right there. I wanted to see Solana make a decent move from this W formation to try and come up towards this imbalance right here. But going over into Solana itself, you can see that it was a bit of a tricky one, but she did go into that imbalance and she made the breakout to the upside to only come back all the way and just clear the liquidity back down again, which of course, when we look at the liquidations, you can see that they made the move up, hit the short liquidations. But what I'm seeing right now is Bitcoin is holding out in terms of the longs. We're not seeing long liquidations coming in. These are the small guys, the guys who are using 100x leverage with low margins. They're getting liquidated first because they're going long up here and their positions are being exposed here. But you have got an influx of short liquidations coming into play, which means that if Bitcoin is going to consolidate into this evening, or should I say going into tomorrow, well, what could actually lead Bitcoin to move up? Well, going into the calendar, you can see that we don't have anything to be too concerned about. Well, is this something to be concerned about? An economist behind a 2024 Nobel Prize calls the Genius Act a setup for disaster. All right, listen. People are going to put their opinion behind what they think about the government or the US government's intervention with cryptocurrency. The Johnson, a British-American political economist who won the Nobel Prize in 2024, claims that the Genius Act and the Clarity Act weaken long-standing protections intended to prevent market instability and protect investors. He goes on to say that, unfortunately, the crypto industry has gained so much political power, primarily through political donations, that the Genius Act and the Clarity Act are designed to prevent reasonable regulation. The result is likely to be a boom-bust cycle of epic proportions. All right, then. So he thinks that the boom-bust cycle is going to come into play with cryptocurrency. Will Bitcoin correct? Most definitely. Bitcoin will have its time where it comes back down. Let's just go on to a higher time frame to put it into perspective. Bitcoin has just been behaving somewhat parabolic. I mean, not so much parabolic, but you can see that as long as Bitcoin keeps on moving up with slight retracements like this, rise, retrace, continuation. Rise, retrace, continuation. As long as we keep seeing this zigzag formation with Bitcoin, it would then give us the idea that investors are stepping in, buying Bitcoin up as it pulls back. So you can see here that they were buying Bitcoin as it drops. They sell it as it rises. Then a new wave of investors come in who already made their money over here, are going to be buying the Bitcoin on the dip. So you can see there, someone bought $5.71 million worth of Bitcoin, and now they've sold it. They've marked it up again. You got more guys up here wanting to sell more Bitcoin as we're getting close towards the all-time high. And there's someone that wants to sell $23 million worth of Bitcoin at 117,429. We go over to the open interest and the options and the liquidations market. You can see people are forever committing their idea and their belief about where Bitcoin's price should be. So as long as you have this idea that investors believe Bitcoin's price needs to be higher or lower, then going into the idea of this Nobel Prize gentleman, where's he gone? Bloody hell, I've lost it. Here we go. With his logic that he thinks that it's going to be setting up for a boom bust cycle, quite frankly, the marketplace itself in terms of the NASDAQ is going to experience moves up and down because crypto is following the stock market. And when the stock market drops, cryptocurrency drops. And that, of course, is all down to this ETF. Why? Because you've got institutional investors playing the Bitcoin. You've also got companies adding Bitcoin to their treasury. Just because they're adding it to their treasury doesn't mean that they're going to keep on holding it. No, they're not all going to be like MicroStrategy, but they're going to try and take advantage of Bitcoin's value going up. And when Bitcoin's price goes up to the $250,000 mark, that's when Bitcoin will start to become the store of value. And then only bigger participants are going to be playing Bitcoin, which means that they're going to be controlling the price. Unless someone comes in and sells a whole bag of Bitcoin and rocks it to the downside, Bitcoin's not going to be going down. It will be going up, but it will come back one point. Now, how much will it come down to? Well, when the new norm of Bitcoin's value is, for example, if Bitcoin were to shoot up towards 250,000 and then it came straight back down again to 100,000, then the logic says that that would be a fair value price for Bitcoin. So then you'll have participants stepping in and buying it up. Equally, it would then shoot back up again. And then it could be going over towards the 300 mark or the 400 mark or even to that wild price point that everybody's thinking about is Michael Saylor's price projection of a $13 million Bitcoin. What I'm trying to say to you all, ladies and gentlemen, is this. Yes, when you get Nobel Prize winners saying that there is a problem with the Genius Act and the Clarity Act and that it's all been done politically, regardless of whether it's being done politically or not, if you can take advantage of the movement of Bitcoin to the upside, just make sure that you're paying yourselves on the way, guys, because Bitcoin will go up and it will go down. I think the next event that's coming into play, guys, is the story of the interest rates. When they cut the interest rates, historically, when the Federal Reserve decides to pivot on that, that's a change in monetary policy. That usually brings anything between a 30 to a 50% correction in the marketplace. Come on, man, you're saying to me that you want to be buying Nvidia at these expensive prices? Of course you don't. It's at an all-time high right now. And this is what's fueling the market. But look, Nvidia is trading up for the day. Let's just quickly go and have a look at that. So, sorry, it's trading down 0.08 for the day. I mean, it's not really doing too bad, let's be honest, but it's at its all-time highs, and the market cap for this is just continuously going up. Hit an all-time high today, and it's pulled back. But I know everybody's asking the question right now, but Tino, what about Circle? Well, let's go and have a look at Circle, ladies and gentlemen. Check this out. So Circle has actually now managed to pull back to $152.72. Now, this is where it gets interesting. Let me just put things into perspective. In front of you is an article that came out 7 days ago where Circle launches native USDC and CCTP version 2 on Hyperliquid, okay? Now, regardless of what this means, okay, I don't care about what this does for Hyperliquid. All it simply does is it just makes it easier for investors to transact on Hyperliquid, okay? Now, Arbitrium platform, they're going to probably see a bit of a struggle with that because you have to bridge in order to utilize USDC. However, with this relationship between Circle and Hyperliquid, you don't need to do that. However, what am I looking at? I'm looking at service provider. So let's just go over to Circle. In front of you is Circle statistics, and you can see it's currently trading at $152 a share. We've got two fund owners coming into play and playing this. It's got a $34 billion market cap, averagely trades around 29 million shares per day. And comparison into Coinbase itself, you can see that Coinbase is only half of that. So already as a competitor, it's already smashing Coinbase in terms of the demand and the volume that is traded. But let me just put things into perspective. with something like this, I think this is going to be the first of many. Circle is going to start getting into bed with many other companies in the cryptocurrency space. What does that mean? Well, for every company that they do get into bed with, they're going to be printing the USDC. Remember, look what Circle does. It provides digital currencies for blockchains, payments, commerce, and financial applications. That's 3 separate sectors. When you think about it, that's 3 ways that they can hit certain marketplaces in regards to cryptocurrency and provide a service. When they're providing a service, it means that there is a demand. If there is a demand, it equally means they're going to be earning from it. And if they're earning from it, then of course, investors that invest in the company are going to see a benefit in terms of earnings per share. So we're looking at the price of Circle right now, and you're thinking, oh my God, it's going down and it's trading below $200 and it's now $152. What does it all mean? Well, let's just be honest now. Look at the volume. It's zilch. There is no massive selling happening right now. Okay. And in my honest opinion, I believe that they are accumulating Circle because there's, of course, participants that know in terms of the trajectory of where this company is going to end up in the future, there is potentially business deals that are going to be coming into play. You think this was done overnight? No, this was probably arranged a long time ago and they've just decided to come out with it. Did you see price action for Circle go up on that basis? No, you didn't. But they're accumulating. So Circle, in my opinion, is going to end up becoming an asset that does trade well in the future because of the utility of USDC. And of course, the Genius Act and of course, the Clarity Bill itself. These are all things that are going to make it easier for Circle to do business with USDC. Now, as long as that's going to be coming into play, then the share price is going to end up going up. In my opinion, it's going to probably end up going towards the $300 mark and beyond. I think it's going to end up becoming about a $500 asset in the future. And I do believe that its average daily volume is going to surpass that of Coinbase's. It's the only competitor against Coinbase in the cryptocurrency space that is linked to the stock market. With that being said, ladies and gentlemen, it finalizes our video for this evening. But remember, if you want to take advantage of any trade setups similar to the ones that I provided today for the guys in the Platinum membership, then head over to tradersreality.com in the description and you'll be able to get access to that. On top of that, you'll get access to the block trade principle PDF, which is what I use today to effectively exploit Bitcoin's move to the upside as well as Ethereum's move as well. And if you're not trading on BTCC, where you do get the benefit of being able to trade other markets such as the NASDAQ, tokenized stocks, where you can trade gold, you can trade BlackRock, MicroStrategy, NVIDIA, all of those guys. That's where you can trade all of that in BTCC. But in my opinion, it's a great place for you to hedge because if you're stuck in a cryptocurrency trade and you see Forex moving, you can trade Euro, you can trade Pound, and you can also trade the NASDAQ as well, which is deemed as the Tech 100 USDT. That's also in the description of this video. And if you do sign up with that, you also get a 10% bonus that's put into your account on every Wednesday. But also it's great for anyone that is in the US because you don't need KYC and you can use VPN. Other than that, ladies and gentlemen, mad love and respect. Please pay yourselves, and I'll be tuning into you all tomorrow. Peace.